Hello and welcome to The Explainer. Today, we're diving into the absolute explosion of financial technology in India, a market that is just completely rewriting the rules. But what's really fascinating is this quiet strategy the biggest players are using to dominate. It's a secret that they've earned, not bought. So let's get right into it. All right, so here's our game plan. First, we'll look at the sheer scale of this fintech boom. Then we'll unpack what organic growth really means. After that, we're jumping into the playbook of the giants themselves, breaking down their strategies, and finally, we'll wrap up with the big takeaway. To really get the strategy, you first have to appreciate the size of the playing field. And it really all comes down to one just massive number. Get this. $421 billion. That's the projected value of India's fintech market by 2029. To put that in perspective, that's up from about $111 billion in 2024. We're talking a growth rate of over 30% a year. This isn't just growth, it's a full-on gold rush. So when you see a number that big, the question is obvious, right? What is fueling this rocket ship? Is it just a bunch of venture capital money getting tossed around? Or is there something, smarter, more sustainable happening right under the surface? And that brings us to the secret ingredient we were talking about, the power of organic growth. This is really the core idea you have to get to understand how these companies are building empires that are meant to last. To put it simply, organic growth is all about building from the inside out. It's not about going out and buying other companies to get bigger. It's about making your own stuff better, making your services stickier, and making your operations sharper. It's the kind of growth you earn, not the kind you just go out and buy. So think of it like this. Market growth, that's the rising tide that lifts all the boats. Organic growth, on the other hand, is about building a better boat. It's a strategic choice. It means you're more cost efficient, you're focused on the long term, and you're the one in control, not just floating along with the market currents. And this approach, it creates this really powerful cycle. See, when you focus like a laser on the customer, you're forced to innovate. That innovation then leads to sustainable, cost-effective growth, which, in turn, builds incredible customer loyalty. And then the whole thing starts all over again. Okay, so that's the theory. Now let's look at the proof. We're going to break down the playbook of 3 Indian fintech giants who used this exact idea of organic growth to build their empires. First up, PhonePe. I mean, if you're in India, chances are pretty high this app is on your phone right now. They're a giant in UPI payments. But how they got there, well, it was no accident. Their whole strategy was really built on one core idea: inclusion. PhonePe went hyper-local. They offered their app in over 10 Indian languages, reaching millions of people who were kind of left out of the digital economy. And they didn't just focus on big online stores. No, they went street by street, partnering with all the small shops and merchants to build this huge offline network from the ground up. And the result of that grassroots strategy? Almost half. Nearly half of all UPI transactions in the entire country. I mean, that is just staggering dominance. And it was built not on flashy ad campaigns, but on deep, foundational inclusion. That's organic growth right there. Okay, next up, let's talk about Razorpay. They took the very same principles and applied them to a totally different market. Instead of everyday consumers, they focused on making themselves absolutely essential to other businesses. Razorpay's genius was realizing that as this whole digital economy was booming, other businesses were going to need some serious financial tools. So they didn't just process payments. They built an entire suite of services. Razorpay X gave businesses modern banking. Their software tools helped small and medium companies manage everything, from payroll to loans. They basically grew by becoming the financial backbone for other growing businesses. And the result? They hit a billion-dollar valuation, became a unicorn, almost entirely because their products were just that good. Customers didn't show up for some marketing hype. They came and they stayed because the tools worked. That is pure product-led organic growth. All right, our final case study is the ultimate disruptor, Zerodha. These guys took on the old-school, stuffy world of stockbrokering and completely turned it on its head. And the craziest part? They did it without taking a single dime of external capital.
Their strategy was this brilliant one-two punch. First, the disruption. They made investing super accessible by getting rid of brokerage fees for a lot of trades. That brought in a flood of new investors. But then came the masterstroke. They built Zerota Varsity, this massive, totally free educational platform. They didn't just want customers, they wanted smart, empowered investors. And that built an incredible amount of trust.
And you just can't argue with the impact. 20%. They handle a fifth of the entire country's retail trading volume, all without any external funding or a big marketing budget. They grew because they gave people real value and built a community around education. It's just a stunning example of content-led growth. Okay, so we've looked at the case studies. Now let's pull it all together. Let's distill this down into a universal playbook. What are the common threads here that really any business could learn from? So the blueprint really boils down to these 4 pillars. First, you've got relentless product innovation, just like Razorpay. Second, deep localization and inclusion, like PhonePay. Third, building trust through content and education, like Zerota. And holding it all together is the smart use of data and technology to really understand what your customers need. This right here, this is the playbook. So, after all of that, what's the one big idea you should walk away with? What's the final takeaway? It's this. Simple as that. Growth does not have to be bought. In an age where everyone is obsessed with funding rounds and buying up the competition, these companies prove that the most durable, the most sustainable, and really the most powerful growth, it comes from within. It comes from building something people truly need and love. And that's the thought I want to leave you with, something that applies way beyond just fintech. What if the smartest strategy, the winning strategy, isn't about outspending everyone else, but just building better? Thanks for watching The Explainer.